I believe you had a great weekend too. All right. Hi, Andrea. All right. So I believe you can hear me, you can see me. So we are ready to go, right? Okay. Please let me make sure. Okay. If you have a good connection, if you can see me, if you can hear me, please say yes. All right. Great, great, great. Thank you so much. Thank you so much. Yeah. So this time we're gonna have a presentation, right? Presentations. So this will be very, very casual conversations, very, very casual meetings. Okay. So we just check out, okay, how your simulation is going. Okay. To prepare these presentations, I already, okay, Jennifer. Okay, no problem. I already looked up your numbers. I checked your numbers, and it was, pretty impressive. I was very happy, very happy. Okay, so you are competing against each other, but my goal is your learning. Okay, then I have some, I said benchmark numbers, and okay, and based on these numbers, I just, judge if you know what you're doing. Okay, then perfect. Okay. Then I saw your numbers. Then every teams actually seem to understand what you're doing exactly. Okay. So it's a competition. So some teams are good performers, some teams are not, but it doesn't matter. It's not a big issue. Okay. Then all the teams actually knows what you are doing. It is very important. Okay. The implication of a strategy. Okay. It will be a good experience for you. Okay. Not in this section, not in this graduate, but sometimes I provide this simulation in the undergraduate too. I had two undergraduate senior classes, and okay, and then a team in the 6 teams, among 6 teams, a team in the undergraduate teams has a what is it, 99 percentile of the national competition among out of over 3,000 teams. It was great. Wow, it is great. Yeah, I am so happy. I'm so happy. So I'm very closely look at their numbers too, and your numbers, of course. And I'm very happy in these simulations. Okay, so let's go. All right. So very casual presentation, very casual conversation. So each team has just 5 minutes to 10 minutes, whatever. Okay. So you can just relax and enjoy, see what other teams are doing. Okay. Um, okay, let's do that. Please go ahead on Canvas. Okay. There's a presentation tool, right? Under the keys, there's a presentation tool. Okay. And you can evaluate presentations, okay, include your team and other teams. Okay, so presentation 2, I should, okay, all right, it's now available. Okay. Presentation 2, you can evaluate other teams' presentations. So for example, question 1, evaluate team 1 here, then 1 is lowest and 5 is highest. Okay. And question 2, 3, 4, 5, and 6. 6 questions available. So you already did in the presentation 1, so you're familiar with this. So please do so, okay, for fun. Okay. All right. So team 6 wanna go first. Okay. Probably it is. It's just fine for everyone. So Jennifer, who is gonna be your presenter? You. Okay. So Jennifer, where are you? Okay. So now Jennifer is the presenter. So please go ahead. Okay, please go ahead. Start your presentation as soon as you are ready. Okay, Jennifer, please go ahead.
All right, let me see. I think
You can share You can share your screen.
Mm-hmm. I think it's this.
And any other teams who want to go next, please let me know. All right, Jennifer is working.
All right, I think that's all good. Everyone can see it. So Lauren is going to kick us off here.
Okay, Team Ferris, go.
Hey guys, so we're Team Ferris, and our group consists of Dalton, Brian, me, Lauren, Daniel, and Jennifer. And so, as we said in our last presentation, our strategy was going with the local niche cost leader, and so we were still focusing on the low tech market. And one of our big goals was still trying to maintain our market share, which we were able to do with having 29.6% in the U.S. market. And we still tried to price pretty fairly in the low tech market. We priced our product at $32.50. And we introduced a new product, putting it at 34, just a little bit higher. And we added a region kit, and our global market share ended up being 14.4%. And then with China, we were still also able to maintain our market share at 26.3%, which was pretty close to our goal of still trying to keep it around like a third of the market. And we raised our prices slightly at $229.50 and $240 for our new product, and did no region kit. And also our prices were high enough to compete in the low tech and the high tech market.
Okay, guys. So as Lauren has already stated, we chose to incorporate a new product, which was named Focus. It came in as a higher accuracy and higher speed, trying to make it a slightly higher quality product as well as a newer product with about this limited service life compared to our Fast, which is our primary product at this moment, which is at 6.8 accuracy and speed. So this is still maintaining our perceptual map by trying to stay right at that ideal and slightly at it to be able to continue with our margins.
Okay. All right, so we wanted to focus on the our financial metrics of the balanced scorecard. As you can see on the screen, we broke it down by rounds 1, 2, and 3. Return on asset. This last round actually came in about 9.3%. Market cap about 16.3%, and our debt to asset ratio is 30.2%. You notice on the right hand side, these are our baseline sources, our minimum we're trying to shoot for. Next slide, please. So we noticed that our debt to asset ratio was needed some improvement. So we decided to break it down, look at our total liabilities, total assets per round. And as you can see that from rounds 1 and 2, we did decrease our debt, which is good. Our assets did slightly move upward, but our debt did kind of steady out from 2 to 3. It's something we need to work on our future rounds. Next slide, please. So the next metric, the last metric is profit. As you can see from round 1 and 2, we did pretty well. Going into round 3, we did lose some, and we have some ground to gain if we want to try to target that 16.4 million profit. Next slide, please. And we got a couple of financial goals here we want to try to shoot for in the next round. First, we want to, of course, decrease our debt, increase our assets, increase our profits. We also want to maintain continue to increase, our market cap and return on assets, as well as improve our bond rating, which actually has been improving every single round. So we want to continue that trend. Next slide.
So we definitely learned a lot in years 1 through 3. Last time we did this presentation, we talked about how we're really looking toward the future and doing a long-term approach, because we did not do very well in the first round because we invested so heavily into moving to China and to developing R&D and things like that, that having a low-cost product kind of hurt us, and our overall profit was, I think, the lowest out of the whole group. However, year 2, which you had seen just a couple slides ago, our profit increased significantly. Year 3, it dipped a little bit, primarily because, again, we were trying something a little bit new. We introduced that new product focus, and it was the first time we had done it. It was kind of an experiment, knowing that we still had 2 years to recoup any issues after that. So we launched it this past year, and now we're hoping to, now that we understand the market a bit more, really increase the revenue from both of these 2 different products. We were playing around with how much we expect to split the market share between these 2 different products here, and it came out a little bit differently than we expected. So we're going to refocus on our inventory a little bit, but ultimately we think that playing the long game is helping us out here. And since we're able to keep our costs lower, and as Lauren said earlier, we're able to increase our prices a little bit while staying low cost, we're still hoping that that ends up being a good strategy for us long term.
Okay. All right.
Yeah, just going off of what Jen said, some of the things that we learned is that we need to invest in our employees more. We would like to invest in them to lower our turnover. We had 43 new employees and 34 separated employees. And then by investing in those employees, we expect to raise our productivity index. We would also like to maintain our high contribution margins. We've had high margins for the first 3 years, with a margin of 34.8 last year and a contribution margin of 37.3 this year, with the industry average being 37.7. So over the first 3 years, we're competing with each of the other groups available. And we also learned that we would like to rebalance our inventory levels. Our inventory is not where we wanted them, and we look forward to getting them back on track in the future rounds in both the low tech and the high tech segments.
All right. Great. All right. Great. Okay. Actually, it seems that your team, Team Ferries, has a good plan, in the right direction. Okay. So actually, Jennifer had a good comments on the future plans on these simulations. Okay. Those comments are consistent with my suggestions for general, every teams. The first one. Actually, we have only 5 rounds. Usually, I give 8 rounds, the maximum rounds for students, but we have time limits. Okay, the number of meetings are limited, so only 5 meetings, rounds. Okay, so we are doing round 4. So we have only 2 more rounds. Okay, that means you need to think about your harvest. Okay, because we done in the round 5. Okay, so at this point, probably for your harvest, to maximize your harvest from your investment, okay, you need to probably reduce your investment, okay, then focus on reducing cost. That means cost leadership strategy. Okay, so Jennifer actually got that idea too. Okay, so please focus on your harvest. All right, so at this point, cost leadership makes a lot of sense rather than product differentiations. Okay, and second one. Okay, and it seems that Team Ferris is getting closer, okay, to what customers want. Okay, please make sure Team Ferris. Okay? So if you are moving to the range what customers really want, okay, closer, round by round, and it's perfect, then your performance will go up. Okay, so please make sure your direction, your product is closing to what customers want. Okay, this suggestion is just for every teams. Okay, and the last one is price. your price. Okay. Some people confuse. Okay. Lower price leads higher demand or higher what? Revenues. But it's not really true. It's not really true. Okay. So your price should be appropriate. Okay. Appropriate. Not just low price. Low price not always work. Okay. So you need to find appropriate price. Then you can maintain your contribution margins. Okay. You can maintain your contribution margins. So three suggestions at this point. The first one, harvest strategy. Second one, your product should be close to your customers and appropriate price. Okay, think about that. All the teams, the general comments. Okay, great. Okay, so the next is team 3. Okay, Chester. So Caitlin, are you gonna be the presenter?
Yes, I will be.
Okay, so you are the presenter, so please go ahead.
Okay.
This is Team Chester, Group 3.
Okay, can you guys see my screen?
Yes.
My presentation? Okay. Alrighty, well, I'm going to kick us off and get us started. So we are Chester Group 3. Our product is cake. Our group members are Courtney Griffin, Jory Hodak, Spence Johns, and myself. And I'm going to start with a quick overview of our product and kind of what our strategy was here in rounds 2 and 3. We decided to target the United States and Germany again, but we are adding the China market in round 4. So we are working up to that. And then we also are continuing to focus on our high-tech customers, high-tech customer segments. So focusing on maintaining and increasing that speed and accuracy of our products. So we're continuing to move those and increase those so that we can get closer to that that expectation of our customers in the high-tech segment.
Sorry, Caitlin.
Mm-hmm.
You intentionally share your video conference screen, or do you have any other screen you want to share?
Oh, do you not see my screen?
I am seeing your video conference screen.
Oh, okay. Well, let me try that again. I'm sorry about that. Oh, here we go. Okay. Okay. Can you guys see the presentation now?
Yes, I can see it.
Okay. I'm going to leave it in this mode and not present because I'm wondering if that affected it too. Not sure what I did wrong there, but okay. Sorry about that. So I'm on bullet point number 3 now. We did decide to also introduce a new product this round. Well, we're introducing a new product technically in the next round. We started it in round 3, so that will require us to have some time before we can before we can fully introduce it into the market. But we're ramping up to that. We're preparing the production for that. And this one will be specifically to target low-tech customers. So we felt like after a couple of rounds, we realized there is a little bit more opportunity with the low-tech customers than we thought there might be originally. And so our goal is to grow our customer engagement, so both products can increase in profit, but we can see the profit from both the low-tech and the high-tech customer segments. Excuse me. And then our last main point here is that we were planning to invest back in our company and the plant specifically with the profits that we were gaining. So in rounds 1 and 2, we did make significant profit, and we were able to utilize that to invest back into the plant and to help improve our production capabilities within the plant that we have. And then we also used some of that profit to help us invest in the production line for the new product that will specifically focus on the low-tech customers. And next we will cover R&D.
So for our R&D, we wanted to specifically target the high-tech customers. So we wanted to increase the speed and accuracy because that was the most important factor for the U.S. and Germany. And then for our new product, we're trying to accommodate the speed and accuracy for the low-tech in the China market, which we haven't been introduced to the low-tech market or the China market. So both are new for us this round. And then we still kind of have the same goals as last time. We want to keep our service life
low while still meeting the other expectations. And then the price of our low tech product and our high tech product will directly correlate with the speed and accuracy that we decide to use.
Okay, and I will cover marketing next. So we are still focusing on pricing on the higher end, specifically for the high-tech market, of course, because those customers are less price sensitive. And you can see on the right that helped us get about 20% of the U.S. market specifically for the high-tech customers. So that number has gone down a little bit between rounds 1 and 3. So we're hoping to increase that and evaluate what we need to change for round 4. But we want to focus on making customers aware to help us increase that, increase our sales, first of all. From a marketing perspective, we did and continue to increase that in round 2 and 3, but we want to continue again to look at how we can increase our customer awareness so that we can increase our sales after that. And then also from a low-tech customer perspective, we are, of course, going to focus on what price would be applicable for them when we are creating this new product and releasing it specifically to the China low-tech market. And then we're focusing in terms of our forecasting and our production, focusing on forecasting generously so that we can make sure that we're producing enough to meet the forecast that we have, or to meet the production that we end up having in each round, but cautiously to not have too much excess inventory, which is, we did notice in round 2, I think specifically that that affected our our ending cash position quite a bit and lowered that number. So we're trying to not end up having too much inventory, which leads me into the next slide of production.
Can you guys hear me?
Yes.
Okay. So as Caitlin mentioned, she kind of covered our strategy. We just are aiming to meet forecasts and to not have a lot of inventory left. You can kind of see here that we have slowly begun to increase capacity so that we can increase our production. We did not increase our production or our capacity a lot in the last round because we were using some of those funds strategically to begin to research and plan for a new product line. But we had done that previously, so we still have space to go. We want to definitely be continuing to utilize that capacity, but we didn't want to overproduce. And then with our production profits, we are focusing on reinvestment. So we're taking those products, the funds that we got from production, and we're turning around and using those to continue to invest in our product and our research so that we can continue to make our product better.
Yeah, and then I would just add at the end there, in terms of our picture here, I just want to highlight, I know it's very small because of the size of the picture, but we're the third group listed here, Chester, and this was a decrease from previous rounds. So we produced less than what we had hoped to. So again, we're focusing on customer awareness and making sure our pricing is right as we move forward to make sure that we can increase our production there. And then lastly, Jory will cover the finance slide for us.
So I don't have great news as far as our financial standings after this round. We were trending up. Our stock price line is the top one, the green one on the graph there. And you can see it has dropped to $43.99. So that was not ideal. But how we got there was this round, we pretty much left everything alone except we issued some stock just to kind of test the waters and see kind of how that would affect things for us. And we're still sticking to our initial strategy of using our profits to retire the long-term debt and not taking out more than we have to, and only issuing or making changes as we go, but only doing small amounts so we don't jump in and totally derail everything. So this is kind of where we're at right now, and we hope as we create this new product, this new low-tech product, that we can use that to kind of counter what happened in this round as we move forward.
Okay, well that wraps up our presentation. We'd be happy to answer any questions or receive any feedback. But yeah, like Jory said, hopefully we'll be able to make some adjustments and improve in the next couple of rounds. Dr. K, I think you're on mute.
Thank you, Caitlin. Okay, I just turned on my my microphone. Okay.
I thought it was my audio for a second, and then I realized your mute sign was on.
It happens. Okay. So thank you so much. Okay. So any question, comment? Yeah. So it's a pretty good presentation. Very nice. Very nice. Okay. For these simulations, my intention was very simple. The level of the complexity is between easy and medium. Easy and medium. So actually, I didn't program about the interest rates among countries. That means you don't need to care about interest rates, and also you don't need to care about treasury rates. Basically, which is basically determined by the interest rate and also currencies exchange rate. Okay? But these days, okay, so this story is not related with this simulation, but these days, like today, we have very, very critical situation in which interest rates determine a lot of factors in our economy. Okay? So these days is a kind of transition period. Okay, low interest rate in the USA so far, and then interest rate is going to skyrocket. Okay, probably you saw some the mortgage rates. Okay, it was about 199% just last year. Then this time it's about 5%, 6%. Okay, so that means interest rates is in the transition time. Okay, so USA has a upward interest rate, but actually most countries have a higher interest rate these days, but China has a low interest rate actually because their economy is not good and they want to boost their economy by supporting their real estate. Okay, real estate. So if we consider interest rates among countries, it will be much more complicated to invest. So that's why I just want to simplify our simulations. Okay, so but as a strategist, okay, you always be sensitive about interest rates, okay, because it determines a lot of economic factors. Okay, so Federal Reserve, what they are talking about is you should be very sensitive about it. Okay, and mortgage rates too. Mortgage rates are just not factor to determine your house price. Mortgage rates is determined by a lot of macroeconomic factors. So if you understand this mortgage rate, you understand many macro factors. Okay, our business, think about that. I just looked at 3 levels of factors: macro, industry, and corporation. Okay? Macro, industry, and corporation. How much? Probably 3, 4. So macro is 3, industry 3, and corporation 4. Okay. So these 3 levels of factors are very important. So we are focused on what? Corporation level 4. Okay. But our environment are still composed of macro, industry, and corporations. Okay. All right, great. So who is next? Team 1, Team Andrew. Who is gonna be the presenter? Joaquin. Okay. Okay, please go ahead, Joaquin. You are the presenter.
So our team is Juan Andrews, composed by Jamison Christie, Jakara Boswell, myself, and Austin Brooks. Then we're gonna go over our results and go deeper into R&D, marketing, production, finance, and what our next steps will be. So last ones were not the best, but we decided to come up with a new product that will be between the lower end and higher end. One of our main issues was we will touch upon this later, but it was our big emergency loan. So we're trying to reduce the debt as much as possible, as well as reduce inventory.
So I want to talk about research and development. And the last time around we did these presentations in the previous rounds, our goal was to have the highest yield of products. And keeping that in mind, we really wanted to focus on maintaining the highest speed and accuracy for our products, along with keeping a healthy balance between the high tech and low tech. But in reality, we really didn't do the second half of that statement. We're really focusing on maintaining the highest speed and accuracy, and we had two products. One was low tech and one was high tech. And based off of the way that we positioned the speed and accuracy buttons for those products, our customers was actually perceiving both of our products as high tech. And so, that allowed for us not to perform so well. And so our strategy moving forward is to really pay close attention to the customer buying criteria. And so we just want to make sure that we're focusing on keeping the best speed and accuracy for both of our products based off of what market they're in, low tech or high tech.
So as Shakar just told us, is that we try to implement a low tech and high tech, but that did not turn out. So we had two products, Able and Arc. So Able, we try to focus in USA just last round, and this round we introduced it into China. And Arc, which is our high tech, we are introducing to USA only. So we were forecasting Able to be around 4,350 units. In China, forecasting about 1,100 units. And then Arc, since it's just brand new, we were forecasting about 650. So investments, we were trying to invest in automation within the production side of it. Our issues is that we priced it too high and they were both too high tech, and we were producing too many units than we were selling. I'll pass it on to Austin to talk about our marketing standpoint.
So for marketing, we're now selling in all countries, like they were saying. Not all countries, sorry. The previous rounds, Able, Jameson talked about USA and China, and then ARC is only in the US. We have adjusted the price for each of our products so that we can further separate our products from one another. We were trying to move it slightly because they are both perceived as high tech. We were trying to do slowly moving, but since there's only a couple rounds, we might change that up. Our budget, we've changed our promo budget as we have 100% awareness on Able. We're changing that to go down in our promo budget, and then our sales budget is going to be around the same because we still want to sell the same amount, if not more. And then for ARC, we're continuing to have a high promo budget and a high sales budget as we increase awareness for it overall. And then our forecast is based on our original sales and adjust accordingly for the increase in consumers in each area that we're selling in at the moment, and based off of how much our percentage yield is for the shares in each country is. So.
Lastly, for our finance, these past two runs weren't the best. We ended up in net loss in both years. We did have a good sales amount, but this didn't overcome all the costs and interest that we had to pay over our long and short-term debt, as well as our balance sheets. Again, we had a lot of inventory, too much inventory compared to our equity, and our liability was also really high in both rounds, but it's only increasing. So we need to do something to cut down on this long-term debt. For our cash flow, we didn't have much coming from our operating activities. We did have, again, a lot of debt, so that resulted in a high financial activity in cash. But overall, our finances are not looking the best. And this is reflected in our stock price, which declined all the way down. We had a bad earnings per share and a price earning ratio, which eventually led to a decrease in stock price. So again, a problem right now is that our liabilities and debt are taking over the equity, and the revenue is not showing up to be what we expected. We have a lot of outstanding inventory, so we need to work on that as well for the next rounds. But yeah, that was pretty much it. That's our objectives for the next rounds, to try to overcome this debt. Any questions?
All right, nice. Any question, comment? Okay, this was a team chest, right? Oh no, I'm sorry. Team one. Okay, good.
Yeah.
Okay, great. Thank you so much. Okay, so we're gonna move a little bit speedy. Okay, then team four. Who is gonna be a presenter? Okay, Kelly. Okay, Kelly. Now, Kelly, you are the presenter.
Yes, I'm trying to figure out screen sharing.
All right, take your time.
All right, is that working for everyone?
Yes.
Okay, awesome. I'm going to let Victor kick us off.
Yeah, thanks, Callie. What's up, everyone? We are Team Digby, and this is our rounds 2 and 3. All right, and so this is a second and third round kind of product decision that we made. So we decided to introduce a new product into the family known as Doug, which was targeted towards the high-tech market. We decided to introduce it to Germany and China because we thought the US was getting saturated with a bunch of other people. And then our plant location is still in China. We added Germany as a new market for days in addition to the US and China. So days we had in all 3 countries.
Okay. So if you are in the real situation actually your business is what? Almost crazy. China is a shutdown.
Oh yeah, for sure. But luckily, this is a simulation. And so our goals around research and development was ensuring that our new product, Doug, met the high-tech customer buying criteria. We want to make sure our material costs were low for both of our products. Marketing, we wanted to make sure we had low-tech market share in China and Germany, because Germany was kind of untouched in that low-tech market, and maximizing profit potential. Production, with our second product, Doug, we wanted to make sure that we had that product in Germany and that we could maintain good plant utilization rate around 179% or so. And then our finance, we wanted to increase our closing cash position, reduce previous liabilities, and improve shareholder relations.
All right, so some of our strategies and decisions that we made started out with research and development. And so for our existing product, days, we really wanted to maintain moderate speed and accuracy, but exceed expectations for service life and agent revision, since that's an important part of the customer criteria for the low-tech product that it is. Again, for days, we want to focus on keeping costs low in accordance with that criteria. And so for our new product that we launched, it's called Doug. So we wanted to because this is a high-tech product, we wanted to keep the speed and accuracy close to the ideal position for that segment, but just lower than to help manage costs. And then again for Doug, we just wanted to keep the service life moderate to high so that it would appeal to customers in the high-tech market. And then another decision that we made is just to continue to delay the addition of region kits, just to continue to keep costs low for now.
Yeah, so at the core of our strategies, it really comes down to diversification and competitive advantage. So our focus in the last 2 rounds was to diversify our products and our target markets. So we're present in all 3 markets, low and high tech, just to try to maximize profitability where we could. And so with that, we were aiming to earn 80 to 100% customer awareness in our target markets, primarily in China and Germany, with USA more so as an afterthought. And then for customer accessibility, we already had very strong awareness in China from the last round. So we were more so trying to increase our sales budget. Since most people already knew about our product, we just wanted to sell more this time. And it paid off. When we get to the finance section, we'll talk about that. But then, yeah, so we're just, our main goal here was really to earn as much profit as we could. And we also wanted to avoid stockouts. Like from our first round, we had 3 out of 4 stockouts. And so we wanted to reduce that because what we were finding is that we had the potential to sell more, but we didn't produce enough. And so we were just trying to get better at forecasting with our best worst case spreads.
So for production, one of the big things we kind of touched on a little bit was to produce in Germany as a new thing, and then also add new products. So of course, production follows that as well. So we increased some orders in Germany and the US, noticing that we didn't do as well before in previous with those 2 countries because of our inventory numbers. And then in some cases we had for China, in this case, we realized that we needed to lower our number for orders for there because of the demand for the low product that we had there, and also the market hold that we had. So we did that, and then we continued to order the new product inventory for all countries included. But we know that we haven't really eclipsed that yet. Next year, we'll really get into really diving into production, into our products, and trying to make sure that we're selling well as we have that gap. And then for automation, we adjusted for the new year. For the new product, we wanted to establish a new base for the product, but we left A's where it was because we felt that it was doing well, and then we adjusted capacity a little bit to the offset or to adjust with the forecast that we had.
And then on the finance side of things, we got into an emergency loan back in 2024. And so we realized that we needed to increase kind of the debt that we took on so that we didn't get that emergency debt. So we increased our debt to asset ratio by taking some more loans. We increased our contribution margin to 42.49%, which was pretty helpful. We actually paid off our emergency loan. We, in 2025, had the highest net income of the teams that were here. And our closing cash position in 2024 was only 0, but in 2025 it was 15,905. So we really improved there. Bonds issued. So once again, with the adding on some more debt, 2024 we took on 5,000. 2025 we took on 7,000. Dividend, we wanted to keep make sure that our shareholders were always happy with us. So we've been providing dividends every year, and so we provided the 20-cent dividend both years. And then stock issued in 2025 because of our stock performance went up. We decided to issue 500 worth of stocks in 2025.
So we also wanted to take advantage of these new custom modules that we were able to do, like human resources. So some of our strategy for rounds 2 and 3 were to invest moderately and pretty evenly in training and assembly, recruitment or retention, and compensation. We wanted to ensure the existence of assembly teams rather than separate workers to increase productivity, because as we know, people work better in teams rather than by themselves. And that was one thing that in the reports really showed that paid off. That was a good choice for us. It helped us keep turnover rate to a minimum, and we were able to maintain moderate compensation just to, again, manage that turnover rate and to increase customer accessibility. And another one of our kind of strategies, but also kind of our goals, was to achieve a positive productivity index, which resulted in 105%. So we're happy with this.
So round 2 and 3 results and takeaways. So in round 2, we were about middle of the pack in our net profit at a $3,891 profit. Our market shares were only in Germany at 17.2%. In China was 32%, and the USA in 11.5%. However, in round 3, we had big market shares in Germany, China, and the global at 33% in Germany, 20% in China, and 19.9% overall. We also had the largest market set in the low tech Germany at 63.3%. We had the highest net profit in round 3 out of all the teams at 17,351. And like Jess said, we reached our 100% customer awareness in China. And now looking ahead for rounds 4 and 5, like Victor said before, we have a new product in Doug, and we're going to target the high tech with that one. And then we also saw that the growing demand, again, in Germany, for especially low tech, is at 20%, and then for China is at 45%. So we have to make sure to keep putting our foot on the pedal. And then we want to also hopefully increase our growth in the USA market shares, as we only had a 13.8%. However, we know that it's a tough competition out there, so we'll try to do our best.
All right, great. Any question, comment? Okay, great. Good presentations. I was just joking about China, but actually it's just not joking. It's very true, very true. So actually we did this business like this. We did this simulated business, like in the real world. We had a big issue right now because China is locked down. So you cannot produce the products. Okay. So your business is like a crazy. Okay. So I just want to add up some more comments about interest rate, because it's so important in your business. Okay, so interest rate. Think about that base rate. Okay, so in the USA, Federal Reserve determined the base rate. Okay? Why this base rate can be applied in the simulations, not just simulations, in the international business. Think about that. US rate, German rate, and China rate. If US has a low interest rate, other countries can decrease their interest rate too. If US should increase the base rate, other countries should increase their rates too. Okay. Why? Because think about that. You are an international investor. You have money. Okay. Then US rate, okay, is higher. Then your money will go in the USA. So these countries, German, China, okay, they need dollars too, right? Then what they're gonna do? They proportionally maintain the base rate with the US. That'll be US. So that's why international base rates are co-move, okay, go together. Okay? And this time, today, think about that. U.S. Federal Reserve announced that they will increase interest rate to fight against inflation. Right? Okay. So they will raise interest rate. Then German, China, they should increase interest rate too. Okay, but there are a little bit different between German and China. German is like something like a fully open currency system. So investors can move freely from German or to German. Okay? But China is a little bit different. China is a little bit closed to foreign currency market. Okay? So investors cannot freely move. Okay? So China has a little bit what's a buffer, okay, about that interest rate. Okay, so that's why China can, move a little bit independently. Okay, all right. If interest rate increase, what happens? Okay, treasury rate increase. Okay, then mortgage rate increase. That means your housing price probably will be decreased. Okay, how about stocks? They will decrease too. Okay, because if you have money, you can just put in the bank. Then it raises, your interest rate very well. Then why I should invest in stocks? So stock will be decreased. Okay, and bitcoins, okay? Cryptocurrencies, what happens? They will be decreased. So your asset markets will be decreased. Okay, and your real market too, real asset market too. Okay, and because interest rate increase, then you will less spend because you need to pay more interest. Okay, right? So this is a big transition period. Okay, then one more thing. Again, think about that. U.S., German, China. Okay, the pre-pandemic, most countries pursue the perfect internationalizations. Okay, so U.S. research some, product, and China produce that product and consume some, and then go everywhere. Then they was able to reduce cost by internationalizations. It intermingled value networks around the world. But in the pandemic, people just recognized, experience it. Oh, it can be crashed, right? It can be cracked. Okay, so it cannot be efficient anymore. Okay, then also there are some conflicts between countries. Then some technologies, some logistic systems are what? Armed. Okay, armed to fight in this, forces. Okay, so internationalization, okay, is a little bit correct, and then people, rethink about internationalization. Okay, so the big trend will be, okay, they will have a blocked system of economy, okay? Value chains, international chains. So if USA, China has still continuous trade wars, is a big problem, then US, what they want to do? They want to have their own value chains, okay, in their countries, okay? With, the countries they can, cooperate or they can control. All right. So US will, reinvent, okay, new value chain systems to exclude some countries. Okay. So if you are familiar with, the semiconductor industry, you will see this example very well. Okay. So if you're interested in it, just look at some newspaper articles, then you recognize it. Okay. So big trends: interest rate will increase, and internationalization is decreased. Okay, then you will have a better picture to see the world economy. Okay, all right, great. Then who's the next? Team 5. All right, Team Aries. So who is gonna be the presenter? Okay, Andrea. Okay, now you're the presenter, Andrea.
my first time sharing my screen, so I'm just looking for that to find the screen share.
All right. It is working for the first time.
There we go. Okay, so this is Team Erie, which is myself, Maggie Sanford, Laramie Sellers, Helen Simons, and Ian Slaughter. Helen could not be with us tonight. She is on a plane traveling back to Rome, so we wish her safe travels. So a little bit about our offerings there. This is our performance through round 3 summarized, and Ian is going to kick us off talking about our research and development.
Thank you, Andrea. So for our R&D, we've currently got 2 products, one low tech and one high tech. And our goals are really to create products that the consumers want, not necessarily what we think is best. And then the second goal would be to keep material costs down to help increase that profit margin. We've been able to keep our low tech around $8 to $9 per unit, and our high tech kind of hovering around $11 a unit. So what does listening to our customers look like? We're constantly looking to see if the specs have changed in the given market, the level of importance, and then we'll also take a look and see what some other groups' products have done, and how many units they've sold, what their design score is. It was kind of counterintuitive because we're matching what the market wants and not necessarily providing the highest level of accuracy and speed. But we've still managed to get one of the second highest design scores, and we've got pretty good market share and high growth percentages in the markets that we're in. So instead of introducing new products, we really want to focus on optimizing the current products that we have out. And that's kind of it for our R&D. Yep.
On the marketing side, so we did launch our high-tech product in round 2, or we launched it and started that in round 1. It was launched in round 2, and we had already entered high-tech there. And then in round 3, we decided to enter China's high-tech as well because of the great growth opportunity for 2025. We also really looked carefully at where our opportunities were in terms of our awareness and accessibility, and balance that with the growth opportunities, those percentages in each market, to really help us understand where we could maximize our investment in terms of sales and promotion, and really looking at that individually by markets. Overall, our U.S. market share went down slightly after round 3 by 0.8, but we went up overall both in Germany and China pretty well. So we'll continue to look at, in terms of strategy going forward, continue to look at, how are we delivering on that awareness and accessibility, and again, balancing new investments based upon how we've performed and what the growth opportunities are for each of those markets. And then I believe Maggie's going to talk next about our production.
So as for production, our strategy hasn't really changed that much. Our goal has been to meet the sales forecast by producing more units than the forecast, but not to overproduce so that we have tons of inventory left over, since this is costly. But we have also focused on gradually purchasing capacity and automation in order to meet the increasing customer demand, decrease the need for more employees, and decrease the employee turnover rate. And as we have modified our plant, we have stayed below the maximum plant investment. So that's it for production. And now on to Laramie for finances.
Thank you, Maggie. For finance, our strategy really hasn't changed from the beginning. From the first round, we've been issuing long-term debt to give us more free cash flow to have, options to invest in production and sales promotion, and to increase our customer satisfaction. Also, one of our main goals is to maintain quality debt to asset ratio. And we also are utilizing equity financing as well. And we are also maintaining high dividend yields. From round one, we have issued a dividend, and each round we have increased the dividend by close to 100%. And we plan to maintain those high dividend yields to keep our shareholders happy. But overall, for finance, our main goal is to maintain a healthy statement of cash flow and end the round with a strong cash position to avoid emergency debt and to give us flexibility on what we want to invest in to maintain high growth. And as far as our stock price, that has showed we've had around 40% growth per round. So I think our strategy is going pretty well, and I hope it continues that way. Thank you.
And then lastly, just to speak to the human resources module, we did decide to invest moderately across all three of those. Just again, I think as I believe it was Group DB said as well, just to reduce our turnover, make sure that we're operating as efficiently as possible, helping to reduce our cost and boost sales as well. So that is it for Team Erie. If you guys have any questions, we'll be happy to try to answer those.
Okay, it's great. Any question, comment? All right, great. So Team Erie is performing very nice. Okay. This team is one of the leading teams in this simulation. Thank you for your time and effort. Okay, I believe you put a lot of time and effort in this simulation, Team Erie. Great, keep up the good work. All right, who's the next one? Team 2 Baldwin. So Alicia will be presenter.
Yes, I am going to share my screen. So just a moment. All right. Can you see that?
Yes.
Wonderful. All right. So we are Team 2 Baldwin. Just in case you need a refresher, here's our team. And we're excited to share how weeks 2 and 3 went. So just an overview of our company. We have 2 products. Baker is our high-tech product that was introduced in the first round. BUS, we developed in round 1, but officially hit the market in round 2, and it's still with Baker in the market right now. Our plant is in Germany. We are in 3 markets, so USA, Germany, and China, and we chose the global broad differentiator strategy. As we thought through rounds 2 and 3, we made no change in our actual strategy, but we did realize that we needed to make some major investments in order to hit some of our goals and our measures of success. So those investments were product design in order to get our design score up, sales budget in order to increase accessibility, and promo budget to increase awareness. And I will turn it over to Ugo.
Oh, thank you, Alicia. So yeah, we decided to continue having the same a little bit of modifications on the measure of success. The strategy continue being the same. The design score, we were a little bit on the high end on each. Baker, we aim to have a 9.5 and 9.5 on both, and BUS was 6.3 and 6.3. That basically locates it on the high end on both circles right there. So once again, we wanted to keep high prices with moderate total sales. We kept thinking about how we can price properly, not just have a higher price or low price, but how would we keep appropriate prices based on where our cost and our awareness and the sales budget. Next, please. Yeah, so the design score and customer satisfaction were the 2 priorities for us. And also, in order to increase both, we wanted to invest heavily on accessibility and awareness. Next, please. And this was a little bit of our roadmap in order to capture more and more customers. During round one, our score or design score was relatively low, but increased significantly in round 2 and 3. For the low tech, we still have low scores, but we want to continue capturing customers in round 4 and 5, aiming to have higher design scores and a moderate, decent design score for the low tech. Next, please. And yeah, as I mentioned, the design score continue increasing, which is good. We decided to have the same strategy, so we consistently are improving our design scores. Next. And our customer satisfaction is also increasing. We are investing heavily on United States and Germany, and China is catching up, especially on the high tech. Next, please. And the combination of higher customer satisfaction and designer scores, we are seeing an improvement in market share. So slowly, we are gaining some of the so we're making improvements as we go round after round, and we hope to continue doing the same in the next rounds. Next.
Okay, so I'm going to talk about our performance. In terms of the industry overview, we came in 3rd place for sales, and this is an improvement from last round, as we were in 5th place last time. And we also came up to 3rd place in profit, and last round we were 4th place. So we did improve a little bit with that. This round we're 4th place for contribution margin, and last round we were 1st place, so that did go a little down. And then we're now 5th place for stock price, and that's at $15.13. So we've improved in some regards overall, which we are happy with. Now I'm going to pass it over to Luli to talk about what went right and wrong.
Thank you. So we added our low-tech product since the last time we called. We've added this to all the markets. Our speed and our accuracy are really on target for both the low-tech and the high-tech products. Our plant utilization is at 97%, so we have a little bit of wiggle room left to increase production if we need to. Our sales are very high. We're working on our customer satisfaction, and we need to work on our profits a little bit. And Baker has a high customer satisfaction level in 2 markets. Some things went wrong. We had an emergency loan round 2 to cover a lot of the automation costs that we had. And as a result of this, our bond rating dropped, but it's on the rise again. Our BUS customer satisfaction needs to improve a little bit, and overall our profits could improve. But we feel very satisfied with our progress so far. Thank you.
Dr. King, you're muted if you're talking.
Great. Muted again. Okay. All right, so we've done all the 6 teams presentations. Okay. So in the last team, we did Team Baldwin. Okay. So Team Baldwin is improving. Why? Because your product is getting closer to your customers. Okay. If you are in that direction, okay, it's good. Your performance will be improved. Okay. So you always need to make sure you are in that direction in terms of strategy. Okay, so we've done all the 6 teams. Once again, we will have the next presentations in the same way, okay, a casual meeting. But the next week, next Monday, that presentation will be our last meeting, right? Our last meeting. Okay? So we will conclude this semester, next Monday. Okay. So once again, I want to say everyone is doing great. I'm pretty happy. With your performance so far. So any concern? Yay, you are doing great. All right, then we're gonna see next Monday to conclude this semester. You will be the MBA. It's great. Okay. So no question, no comment. I will see you in the next week.